Okay, what's going on, guys? We've just been talking about our plan here for the S&P and QQQ. We talked about the amount of data that we have, a heavy data set week, which obviously leads me to believe, if we do get a bull end log, I was talking about how price would facilitate into that bull end log and potentially lower if we were to fail this line in the sand right here. This is technically where we have, the big area on the chart that 548 is just about where we 545 to 548 is just about where we would like to see obviously some failure from. If we deviate a little bit too far away from that, I would be looking at a buy climax, meaning a three higher high distribution look on the three highs leading into that level to look like it's starting to exhaust from the buy side, right? Those are two big primary leading indicators for me. Another leading indicator for me is obviously going to be some of these names within the Mag 7 market, just how they're behaving off of, like, for example, NVIDIA off of this distribution support that is now obviously a resistance as to where the headline came off of. We also do have obviously some liquidity to sweep slightly above into 115. So this is a little zone in which I will be watching as well. Essentially, all it really is here, guys, is this gap fill into basically where we were claiming this gap. Basically that and the gap fill all the way at the top, and it stretches a little small area on the chart from 112.20 to 115. I will be watching this for a gauge, as well as just if we go over into some of these other names, we obviously have very, very critical levels to get above within Mag 7, right? This is a very interesting chart to me because we're basically bouncing back and rebounding right from the distribution's lower extremes. That was a retest, a failure technically, and now it's trying to claim back above that candle in all of these weeks of resistance over here, like this one here on March 24th, which is the breakdown candle. I'm really interested to see what happens with Microsoft and what happens. I do think Microsoft has similar structure and a similar type of ideology around what Google had. And you guys know I've been bullish Google ever since I was actually bullish on Google ever since this area of the chart. And we got a slight little pop, but that wasn't really much. And then it left behind these gaps for quite some time. And what we did was we kind of undercut support. We filled some of these gaps. We had a lot of volume coming off of those areas that were very critical. We found higher lows into the report. All of the structure was really healthy and clean here on Google for just a slight little gap up. Obviously, some of those gains were given back. It is a bull peg. Is it any sort of substantial, very notable bull peg? No. Is there any sort of substantial, crazy volume behind this? No. And that kind of tells me, with a solid report of a double beat, 40% on the EPS and 1.15% on the revenue, it kind of tells you that, you really do need to smash your earnings report within a window like this, where obviously we've been in a distributive type of tape. I mean, not as of lately, but from the bigger perspective of things, guys, this is definitely a change of character happening within QQQ. And price tells you everything. Whenever you have a big change of character in QQQ, whenever you're pushing into a discount from the high to the low, and you're looking for those lower highs, and you're looking for those gap fills, and you're leading into an earnings season, it's kind of like, you kind of need an impressive report or just something crazy within the guidance call to be able to uh, conclude that things are going to mark up and mark up with a lot of intention and a lot of money built behind those markups, right? That's why we're not really seeing a lot of volume, and we're kind of seeing that day kind of given back here within Google. And this earnings candle is really nothing to be. It's nothing to me that is anything notable. Obviously, this is going to probably be a watch for me, and I'm going to probably be setting alerts here on the actual gap just in case we don't get the bull end log and we more or less kind of just float around the path of least resistance within the NASDAQ, and maybe we claim these levels and we base these levels and everything looks really constructive for just a little small push to the upside. And I'd probably use something like Google. I could also use something like Tesla, but I feel like I already definitely missed this move. I was actually watching this one because on the hourly schematic of all of this going on over here. I mean, this is a very high, tight range of lower highs. We still had gaps to fill to the upside. There wasn't any sort of very large seller, and what we did was we undercut all of these lows and all of these daily candles on this day over here, and then bad earnings came out, and this reclaimed the range the next following day with a really nice gap up, and then pressing up really tightly up against that bear gap. Looked like it was kind of like an hourly high tight flag or pennant for continuation to fill the entirety of the gap at 272. That was a really easy, smooth looking chart, in my opinion. I just was really hyper focused on like my SPY swings and looking to manage that trade in the June contracts and whatnot. But I also had some leveraged ETFs on this on this leg higher. But yeah, Tesla is a really interesting chart to me just because we have a very strong candle. And that very strong said candle here is in a very big spot, being the top of the election gap, as well as this very big resistance that's been very notable here from about 290 into 285. So I feel like this will be a decent gauge as to kind of what Tesla will do. I'm going to keep my eye on this chart as well, just because of the relative strength. Like I said, I'm a little bit late to the name right now, and I understand that, and that's not something that really it doesn't resonate with my trading rules, but like it does look like a really nice looking chart. If you guys go to the weekly chart, there's still not anything super, super, super impressive about this name just yet, right? Obviously, it's looking for a higher low on the weekly schematic from this very large sloping accumulative base that was around here, and then obviously the change of character that happened technically right here from the swing high, right? This was a downtrend followed by a pop. You kind of had your inverse head and shoulders look, which is basically just a change of character from lower highs into now higher lows. The volume profile was becoming very notable, as you guys can see through volume analysis on this weekly chart. Most of the volume was actually coming off of legs from the low. So that explains why Tesla was a very big outperformer within the market leading into obviously the end of the year. And then obviously like the Trump winning the election was kind of the catalyst on all of that. So what they're trying to do is they're trying they're trying to hold a higher low off of this higher low. It's a very, very simple concept here, but there's obviously very big levels to keep in mind of, and we're at those big levels right now. So from smaller time frame analysis, what we would like to see would be obviously a high tight range kind of built out, and that would be a really healthy look for this chart, maybe off of this progression gap around here, which would likely lead to like a path of least resistance look where this presses up tightly up against that resistance, and that's a picture perfect world type of trade. Do I think that that picture perfect world trade is going to happen? I don't know, but I'm prepared for every picture perfect world scenario, right? So I will be setting alerts on Tesla right around here, and I will be looking if the range can get high and tight, maybe into EMAs catching up as well would also be a really nice strong confluence there. And that could be a fantastic trade retrade opportunity after everyone chases. They get kind of chopped up, and then it finally finds its breakthrough, and everyone's already weeded out by the time that this thing actually breaks through and continues its way higher. I don't know if the accumulative base is done from a Wyckofian perspective. What we have is we have ever so slightly this gap being unfilled, which to me, I mean, obviously this is a little bit of a tinfoil hat thought here. But at the same time, guys, there's nothing that says that this range of reaccumulation is done just yet. There's no say in that. I mean, technically, what this could do is put in a UTAD technically within the range, drop back down, finally find its terminal shakeout slash spring, and then finally, obviously, move its way here back to the upside. And there's nothing that says that this is going to happen just yet. And that's why I said you kind of have to wait for your daily candle closures. You have to wait for your weekly candles. You have to wait for what the environment looks like after the earnings season. And you have to obviously kind of, readjust your plan based off of those things that are happening as we move forward, right? So with all that being said, Tesla can be a really, really, really nice this opportunity. If we go over to TSLL, what we had over here was we had a very big amount of volume coming off of the lower end. I usually like to use the leverage DTF of a particular name to tell me, give me more of a directional read. And this is all basically basing off of where that previous summer accumulative base was at. So like I said, just a little bit late to this name, right? Which kind of sucks, but it is what it is. I think that this is a environment where you should be trading lower quantity of trades and higher quality. But this is a really high quality setup to me. We could take a look at some sympathies and just take a look, make sure that none of these look really, really good. We have basically an accumulative base type of look over here within Rivian. I don't touch names like this unless they look absolutely insane. Obviously, we could see from this accumulative base all of the volume patterns around here, guys, like right here, very large volume on very heavy legs to the upside, very large volume with a nice leg to the upside, all coming towards the lower end of the chart in this support. That's very notable to me as well. And you know, these accumulative bases, they could take a very long time. So I don't really touch these names like Rivian that are, you know, fundamentally not as good and as liquid as the other names. There's a lot of squeeze potential behind a name like Rivian, and there's always going to be a solid risk to reward at some point within the chart. But this has earnings, so I'm probably going to wait for that earnings report and then see how they hold up with structure based off of like this inverse head and shoulders look coming off of the low. Technically, what we could get on Rivian, though, for whenever the market does go risk on, and you see this a lot with accumulative bases, would be like a drop, and then that's whenever you start getting the shortening of the thrust. If you guys know what the shortening of the thrust is, it's basically just the lower lows obviously failing to displace beneath the previous lower lows. So you have a low here, and then you get shortening of the thrust looks whenever this fails to displace, and then it pops back to the upside. Maybe you get one more drop. They're soaking equilibrium of the range, so you're taking like your range high, your range low, and they're putting in lower highs that are eliminating supplies to the point where when you get that climactic low happening within the you get that climactic low happening or the spring happening within an accumulation, that's whenever you start looking for structure, the reclaims of levels and whatnot. So Rivian's going to be something on my watch list, but I have to wait and see what goes on after the report. So it's kind of just in the back of my head as a sympathy to Tesla, just in case Tesla starts really moving and Rivian really kind of finalizes this whole base, and then maybe it, you know, obviously reverts back all the way up to like 18 super quick or like 16, 17 super quick, and then we get like a redistribution look, and then it continues its way lower to continue out its base. Kind of a speculative idea, and it's kind of just something that I'm going to keep on my watch list, but it's not going to be anything that's like that I hold a lot of value to. We kind of have a similar look within Ford, and there's a lot. I've been talking about this chart to you guys. I would have been very proud to see someone swing trade Ford down here off of this reversal bar with the amount of volume coming in towards these lows and the shortening of the thrust example once again, where we have this support, they break down the support, they put in one more low, and then that low is kind of like the capitulatory low, which leads to a change of hands, and that's whenever they really press the gas and they really accumulate. That kind of happened off of this support breakdown that ended up being a failure through April 9th, and then what happened was it started to build out some sort of high tight flag with a lot of inside bars right around here where EMA's caught up to it. It was pressing up against this previous daily level that was very critical. So you basically could have just been accumulating further dated swings off of like this high tight range around here with stops with stops on these daily lows. Sorry about that. I can't do anything about that. But yeah, Ford is a really interesting chart to me just because of how clear we have a shortening of the thrust happening over here with the amount of volume coming off of the lows, with the exposure that this name has to like tariff headlines and whatnot, with the positive news coming out. I don't really care about news, like as you guys always have known, but we have a lot of gaps to fill to the upside. We have a very huge one all the way up into 12. So this could be a home run trade if we could get like a pullback and this thing just keeps looking super super good. As you guys could see, that's why it was on my watch list, and it's been on my watch list for quite some time. Baidu, it was another swing idea. This one already kind of played out, which is a little bit unfortunate. We had the shortening of the thrust type of look within Baidu with all of the volume coming off of the lows as well. This was a really nice reversion trade here back to the upside to meet these gap fill targets. At least for a swing trade from down here. It's just a little bit of an awkward chart, so I never really touched it, and I was more focused on SPY. We'll go over into Palantir now, and we're going to talk about Palantir and its potential for distribution as we move forward. I feel like a lot of people, and I've seen on my feed, a lot of people trying to short this name. And yes, it's not a bad idea. Obviously, the trade lost. It's not a bad idea, but it's not fully ready just yet, right? You always want to wait for your distributions and your accumulations to have a really disgusting look from the upper end of the chart. And this thing didn't really look too attractive, right? But we don't really have any range that's built out here. We never had the sign of a seller really stepping up to the plate. We more and less had this thing having a really nice pullback on the weekly and then putting in a super nice weekly candle, and now it's running up into its report. I'm super interested to see what the report has in store for us at the beginning of May, just because, you know, if we keep rallying our way to the upside and then they finally want to, you know, they squeeze out all the shorts and then they sell off the report really hard, and say we get something that looks like this, that can start looking like a super clean distribution schematic that would be something similar to like TSM whenever we had the upper range looking a little bit sus, and then they ran it up into the report. They dropped it really disgustingly, and then they kind of retraced it back up into like the gap, found lower highs, and then this one obviously went full distribution mode, and it started to meet the gap fill targets beneath us, and eventually start to decline well over 20%, right? Which is a fantastic short side trade. I called this one literally on these days over here for the LPSY, and we obviously saw a pullback of however many percent. I mean, this is ridiculous, 37%, right? So I wouldn't hold Palantir short of pulling back and doing those type of numbers, but like I said, this is a speculative idea until we get into that earnings footprint candle, and then once we see that earnings footprint candle, we could obviously start to make a lot of decisions based off of how that earnings candle looks. That's also going to be the case with a lot of the tech names, right? We obviously have Tesla's passed by, Google's passed by, Nvidia's is obviously delayed, and this is looking like it could put in an MSAL within a distribution. If you guys want to look up what an MSAL is real quick, it's kind of like it stands for a major sign of weakness, right? And all that really is, guys, is whenever you have like the lower end of the chart still looking a little bit distributive. If you see like a disgusting looking lower high, or you see something at a gap fill, you see something at where the previous support is now being back tested, like right over here off of where this gap was filled into a new support, or a sweep of this candle and then a big fat failure above. That's how you know the MSAL is there. Around these general areas of where, you know, you are meeting back into almost a round discount, I would believe that would be. A little bit higher up towards 120. So this is not going to be a discounted put premium trade. I'm just going to use it as a gauge. I probably won't trade it unless it's like shorter expiration and an intraday type of trade. I probably will be doing a lot more intraday trading this week, just because I don't really want to have any sort of super confidence swings going through a crazy heavy data set week unless the data really aligns on price marking down, say from a bull end log, and then it starts to exhaust at the highs, and then we lead ourselves into a big data set where things are exhausted up here. The data set will catalyze some sort of LPSY, and that could come off of, with the amount of data that this week, price predictions are much harder because I've been talking about this week for a very long time, and I've been talking about a pullback in May 5th, right? But we need the very clear criteria for us to be able to short this, right? We don't really want to see a gap down and then we short the whole, and then it finds a higher low somewhere within this bull gap, and then we just finally go fill the rest of the gap. And that could be alongside trade redo as well, right? So it all depends on where we move to on futures for just the risk to reward purposes, right? I'm only looking at risk to reward. Obviously, I'm looking at a read on price, But risk to reward is your most important thing right now, right? Because you don't really have a ton of opportunities in the market, and you have a very clear directional read based off of where price is moving. I mean, as of lately, it's been a very clear long side trade. And that could turn into a very clear short side trade as we kind of exhaust and move our way to the upside. So, but like I said, you have to exhaust, you have to move your way to the upside, you have to leave behind all of these gaps, and then obviously the redistribution will be through some sort of data set. It's going to pull back into the gaps, and then we reevaluate from there. We're still in a window of weakness, and Vanna Charm return May 5th. Okay, so if you guys take a look at the calendar, I'll pull up the calendar here real quick. May 5th would be Monday, the first full week of April, actually, for a trading week. So May 5th is whenever we have Vanna Charm returning. This is why I'm in a window right now where I would preferably like to see the redistribution happening so we can short the pop, we could see this thing pull back, Vanna Charm return, and then we could long an LPS somewhere around here on one of these gap fills. They've been layering dark pulls off of, I'll go over to the S&P and show you guys. They've been layering dark pulls down here, right? And then this could be a long into a lower high off the bottom of the progression gap, and then we can obviously start the redistribution. Obviously, down here from May 5th into a window up here would be a window of May 5th, May 16th, window of weakness. Find a lower high off of this progression gap somewhere into May 16th, take it down into the lower gaps if they're not being met yet, and this leg to the upside looks weak, and it looks like it lost levels, and it looks like it doesn't want to claim those levels. It's just typically how Vanna Charm work and how they behave and how they return to the market, the positive flows and all of the things that happen in terms of dealers participating. They happen a week like a week into the new month, or they happen like a couple weeks after. When was our last Vixpiration, actually? Let me go look at the Vixpiration calendar. Okay, it was 16th of April, so it was the day before April OPEX. So after Vixpiration, you get an additional weakness, and then that would be how many weeks after? Like 2 weeks after, and a week into May is whenever like the Vanna Charm return and tend to obviously show off more effects within the market. Um, so with all of that being said, guys, I also really like to see how the banks are going to behave. In my opinion, this is a very important chart just because we could be finding a very, very notable, very, very disgusting lower high at some point if this thing wants to sweep into the gap and reject, and then the size and the banks get real heavy. So I will be watching XLF, and I will potentially be trading XLF as well. Obviously, as we know from the higher time frames, there's some other vehicles within the banking sector that look pretty interesting to me. Obviously, this has been a very notable distribution, and we really haven't got any sort of nasty markdown just yet. So I'm very interested to see if the higher high distribution is going to continuously take place, because we're seeing big sellers coming in off of this whole range, and that's a push back into the supply zone from the banking crisis, right? So it all makes sense, right? We're getting the higher highs kind of sold off, and then we're getting the higher lows weakening as we kind of move our way to the upside. Very, very huge volume actually for this whole entire potential sloping distribution, upward sloping distribution schematic. This is crazy volume up here, because if you take a look at the whole entire range, obviously the banking crisis area is going to have a little bit more volume, but take a look at the volume profile here. I mean, this is the largest volume that we've ever seen on that day since all the way back here. So this has been the largest volume that we've seen within 700 days of action on Schwab, right? And it's all very, very heavy from the top end of the chart up here with these back-to-back days. So what I would like to see would be like, is that seller going to re-participate up here? And are we going to see some weird, sketchy behavior happening off of this high, or are we going to obviously kind of climb our way to the upside, dig a little bit more into the sector ETF bear gap, and then look for the signs within, like, kind of using the XLF sector fund as a gauge as well. I don't know, right? And I mean, this is right off the 618 here on these previous week highs. So would not be surprised to see this one sell or sweep up that Wednesday high and then sell subsequently to that, right? I mean, obviously there's a gap that could obviously result in a move all the way back up towards like 50, and then we could sell from there. But I don't think that has to be the case. I don't think at all, right? Um, I could see a gap sweep, something similar to what I'm looking for within the S&P, or I could see like a buy climax happening, and then obviously a big gap failure. It loses the gap level, and then it starts redistributing all the way back down to like 45 or 47. Okay, I think it's going to be a big gauge just because the top end of the chart is distributive, right? And when you're in a distributive looking chart, these things need to show off weakness, kind of giving you context as to other sectors not really agreeing with the leg higher, and they'll maybe start selling these off a little bit earlier just because they need to obviously meet their needs in terms of orders filled and whatnot before they liquidate tech in just an instant, which can happen through the reports. So this can all basically just kind of give off like a very sketchy look leading into, your end of week data sets, right? So I'm really excited to see what XLF has in store for us, and this could be a fantastic trade in my opinion. Hood, yeah, Hood's a decent looking one. This is in my opinion, coming towards a climactic top, but there also is earnings as well. I typically like to wait for the earnings reports and then take advantage on flush entries when the IV obviously resets and you don't have that implied vol exposure into your positions leading into a report. I would rather just wait and see what the opportunities give us after the report. So this is another name that I'm going to be interested in just seeing how the report goes. Obviously, this one can just climb its way all the way back up to the highs, get everyone bulled up, and then put in some sort of UT, or potentially put in a UT all the way up into 8. I don't think this is. There's no way this is going to 85. There's no way. So there's a big progression gap right around here. And if you guys want to pull fibs, you could take a look at your fibs. You could take a look at your previous lower highs, so right around here. If you want to pull fibs, pull them from up here down into here, and then that kind of gives you a gauge on where discount is. So we are entering discounted put premiums, which is always a role of mine to have. It's not a directional read based off of fibs. I'm just saying start looking for the signs from if you have a sketchy top into if you want to see some sort of lower high. It typically comes off of discount, right? Very similar structure to Palantir, guys. There isn't anything in terms of a footprint candle that tells us that these distributions are getting started and they're continuously distributing. Something like TSM was a much, much different schematic. Something like Schwab isn't even as clear just yet, in my opinion, right? But we're also in a very, very big high. We're in a very big range within some of these bank names. If we go over to names like JPM, obviously these are in very critical ranges as well, where we could start to really find change of character charts happening within these banks, just because you're finding lower highs off of legs that sold us off very aggressively, right? So with all of that being said, I mean, these are all in discount. The time to obviously redistribute can be very, very, very soon. We go over into, it could technically stretch a little bit more into June, but that's only a month, that's about a month away. So JPM, we'll take a look at like C. Very, very, in my opinion, quite the ugly look within C. Citibank. To me, this chart just really does not look like anything I would really want to be long on. We do have a very large gap, like I said, right here. They held it as newly found progress from buyers, as you guys could see right here on the Thursday. But very large gap right here. This is also going to be pulling back into its discounted area. If you guys use like volume shelves at all, I don't even have the indicator anymore. It could be a very notable indication of like where a lower high could potentially be. Do I track VIX? Not really. Sometimes I do. Sometimes I track the flow. Sometimes I track the amount of open interest and the certain chains within VIX. I more and less just track like VIX expiration, and then like how the behavior is after that. VIX is in a gap, as we know, right around here, and VIX is never going to be a picture perfect world type of technical analysis because it doesn't obviously operate in the same way that equities do. But we are still within a gap fill. Sometimes technical analysis kind of works, so this is also a gauge over here for VIX, and it's entering into that as we lead into this new week. We're still within a window of weakness. If we go over into SQQQ, this could potentially also be a terminal shakeout happening on this support right here, which was a previous resistance. They broke it out, they held it as a support, and it's quite a large range to obviously deal with, right? I mean, it's from here all the way up into here as where the previous resistance zone was sitting. So if this just gets a really nasty snap back, and then what it does is it reclaims those levels, it's probably going to push back up into these bear gaps up towards like 38. Keep in mind, guys, SQQQ, it's the Pro Shares Ultra Pro Short QQQ. So that's also a nice chart to use as a gauge, and you can wait for those levels to be reclaimed, which is also going to tie in with really nice confluence to like the S&P and this gap level, right? Obviously, we have a path of least resistance right now, so I wouldn't be surprised to see this one continuously kind of moving its way to the upside, exhaust midway or the upper end of the gap, this bear gap, and then redistribute into like the bull end log if we have one, or redistribute into the dark pool prints that have been coming through that have been being built off of 527.50, and they're also layering 514. If that all happens, this could be a super, super, super nice trade, right? And it could be a short into a long into a re-short, kind of like the schematic that I have here for us. I originally drew a different schematic on Twitter, which would have been a gap sweep. They left the gap unfilled. They pulled us back into May 5th for the LPS, and then they continuously move it back to the upside for May 16th after Vanna Charm come in, and that would be our LPS on like the hourly. If you guys go to the hourly, you take a look at the path of least resistance being established, and then they leave behind all of these levels. They lose those levels, it pulls back, those dark pool buyers hit the exchange, and they keep layering, and then it moves its way back to the upside. Then that would be a super high conviction opportunity for this all being a finalized path of least resistance 100%. And then if we actually do get that dip into May 5th and then Vanna Charm return and we kind of squeeze our way back higher into 565 by May 16th, that would lead me to believe that the distribution is going to happen kind of like into June, like I talked about, if we get this schematic playing out. And it would also kind of help out with like banks. Like banks would pull back, they would still leave behind this gap. They would pull back and look good for higher low entries, right? And then we would just ram into that gap into the window of weakness leading into like June, and then we would just redistribute and get smoked, right? So with all that being said, it's going to be a pretty tough week, and it's going to provide, or it's going to obviously require a lot of patience and a lot of planning, and a lot of kind of sitting on the sidelines until you get that opportunity that looks super good that meets the criteria we're talking about, and then you could start scaling into some sort of swing trade. And you could intraday trade throughout the beginning part of the week and look for that perfect criteria, and day trades could fund your swing trade into the end of the week. That's kind of like my plan. I might take a couple intraday trades this week. I haven't been doing that. The last one I did was a really nice win. It was this day over here that I longed the end of the day on one DTE, and I'm kind of pissed I didn't swing trade it. But yeah, I mean, these are all just, or actually, it was over here. No, yeah, it was over there. So some of those levels are going to be very heavily respected. What's going on with my charts, man? A lot of these levels are going to be very heavily respected as we push into these gaps if we do get the redistribution. And the redistribution is just for price facilitating to collect those buyers. And then the leg on the downside is weak and it's of lower volume. We would get one more long opportunity to swing this into May 16th, in my opinion. We go over into just some other areas of stocks, how stocks look, some sectors. Obviously, discretionary doesn't have the best look. There's no optimal range to really be trading McDonald's at or Lulu. Obviously, there's some catalysts behind Nike, and I probably will keep my eye on this just for like a day trade. This is a very large level of progression claimed from buyers on the opening of the gap down around here, and they're trying to flag it on top of that level. I wouldn't mind seeing how Nike kind of looks, right? And this could be a path of least resistance that breaches us a little bit higher into the gap. So if buyers commit to this range and they look a little bit dominant, and maybe they dip it like one more time, and then you finally get like a very big lack of supply happening where this is finding higher lows, it's going to pop back up into this very large gap left behind, right? So I probably will add Nike just as a side focus for me. None of the energy names to me are too attractive just yet. We obviously have some of them looking pretty damn solid on like weekly charts like CVX and whatnot, but there's also big reports coming up that are very soon for a lot of the sector as well. And we obviously have like ZOM reclaiming levels and looking relatively decent, but we also have earnings on Friday there as well. So weeks like this also give us off a lot of reads in terms of looking for rotations happening through reports, through the candles subsequently after those reports are finished, how everything looks leading into and after a report, and then all of it kind of ties in together and it makes sense while everyone else speculates and tries to guess what's going to happen on the reports and whatnot. And then you're just sitting there waiting for those earnings candle footprints that tell you whether or not a distribution is going to continue or whether a distribution is just not ready yet, right? And that's what I mean about like Palantir and like Hood and whatnot, is I'd rather put a little bit of risk on the table and not catching a trade than put risk on the table on a trade that is very speculative and garbage and just not as much edge behind it. I will be watching INTC still. I picked up some lotto calls last week off of this gap. I'm up very slightly on them. They ended up running like 25%, and like I closed up like 20% or something. Something bullshit, something not like that great. I mean, the calls are already in the money, but I do think this one has the potential to put in like a spring test because our spring was potentially this candle, right? And what this is doing is it's gapping down, not anything crazy on the volume on the gap down, just like Google was that I talked about. This doesn't have any big volume on that gap down, right? So I don't really care. It's not a huge footprint for me that's telling me, oh, sellers have the stronger hand here in INTC. No, that's not necessarily the case. And what we did was we undercut a huge support right here. I mean, this is a very big support that was undercut. About a 209-day support that was undercut, followed by obviously a failure to close beneath, break, retest, and move your way lower for a structurally strong seller tape. What it more or less has been doing has been trying to catch higher lows ever since the potential shakeout candle. We just filled a gap today, and we filled it, and we put in a nice, decent looking candle. So I'm probably going to be watching INTC for some sort of like intraday trade here, just to see how this one kind of behaves into its gap, how it behaves off of this level here at 1950 up until like the 20 psych. We're sitting around the 20 psych right now, and if you guys take a look at the daily chart, if you guys take a look at all of the different time frames, I mean, we're not really that much beneath the moving averages. What this did was it filled this gap up here and then kind of sold off from that point. But there's not a lot of volume. There's not anything that's super notable. And actually, the report pushed us down into where a higher low makes sense, and to where you actually had a decent looking hourly buyer with a lot of volume coming in off that candle. So it's an interesting chart in my opinion. I'm probably going to be watching this one. I can remove Baidu now. Hood, like I said, kind of just that peripheral vision type of watch. I will be probably watching TSM, but just on the short side here now. Obviously, this one from highs is it's very declined, right? But I feel like a lot of people are trying to buy into this thing, thinking that we just put in a bottom and we're going to rally our way all the way to the upside. We're looking at gaps being filled in previous previous areas of support that were built on the previous MSAL um, being lost and being retested, and gaps filling in confluence with those areas, right? So we're looking at, this area on the chart. We're looking at all of these areas that extend us all the way up into like 170. We have a gap fill up into 170.58. You go take a look at NVIDIA. It's kind of a similar structure over here with NVIDIA. So I think NVIDIA and TSM are two very, very important charts, in my opinion, to just be looking for kind of what happens off of those areas. Are they going to sell it off at very gross areas? And then is this going to get a disgusting looking candle down here that's soon to come? And if it is, and they're willing to sell this down here, I mean, guys, we still have targets beneath us. I mean, we're down from highs 27%, so this isn't necessarily such an optimal fill. Fair value, in my opinion, would be all the way down here on NVIDIA towards 74 to 67. And potentially even lower, but that's just a very lenient price target that I have in mind if this distribution wants to carry out for a very long amount of time. And if this wants to look like a weekly schematic that just gets absolutely shit on and it starts, all buyers are selling off in their short-term hands, I should say. They're short-term participants, and they sell this thing off and lose this level down here at 90. They're going to be pushing this thing into where there was previous consolidations or where there was previous gaps left behind, right? Which would be down here towards like the sub 80 in, into the 70s towards 74. There's no signs just yet. I'm kind of just planning out things that I could see happening, but at the bottom line, there's no signs. There's no signs just yet. I mean, this undercut the August 5th low, put in this nasty looking candle, and now it's finding higher lows and momentum to the upside. So this momentum has to be stuffed. Are we going to see that momentum stuffed? I don't know yet. We'll have to wait and see. We'll have to wait and see a day or two into the week. Netflix, UTAD, Meta Shorts. Let's take a look at Meta. To me, the chart looks terrible, just in terms of like levels that are like important and just areas that, I mean, it looks. I would never long this. I mean, yeah, it doesn't look good. I would say with on Meta for what I would I'm so sick, man. This is getting annoying. Very big levels lost for sure, Dom. This is such a hard chart to say. They filled the gap. So if they fill the gap and there's nothing notable that can happen from the upside, and you have such a big level right around here, you could start looking for like a lower high. There's also a progression gap level right here as well. It's like right off of the 618. I mean, I would say start looking at this for a signal, like a failure off of this level, and then like that would be your lower high confirmation, and this one would likely sell off at least back into 517 or at least into 533 if you're looking at like a day trade. But I don't like the options chain here. I don't really like how it trades intraday. I don't really like much about Meta. I feel like it's one of the worst tech names. It doesn't like, I don't know, you probably know what I mean. It doesn't trade super, super cleanly. Um, but yeah, I mean, I would definitely not disagree that Meta Shorts could work. Netflix, I mean, I really have not. It's kind of something similar to Palantir, except this is just a little bit higher. And I've been talking about the distribution taking place, but it could be taking place. I told you guys that this was preliminary supply, which I was spot on with, meaning that there's no range established, there's no distribution range over here. It's just a preliminary amount of supply that's entering the market, and it's obviously looking to continue itself with the distributive looks into the new highs, right? And we obviously have that look, but this could start looking like a three higher high type of scenario on Netflix. Here, it's a really, really strong candle, and I would be looking at like breakaway gaps into a candle, something similar to actually to like AMD in 2024, the beginning of it, whenever I called this distribution, and we had this nasty candle at the highs after some of these breakaway gaps, basing over the previous highs. Everyone thought this was like a flag, which I guess it was for the time being, and then it ended up just being a continuation of that distribution. We go over to Netflix and we can kind of see how like we already have our preliminary supply around here, a stoppage in the trend kind of, and then we already kind of have like our secondary footprint of potential distribution going on, but we need to see that third and final sign in the middle phases of a distribution, right? So is this going to put is this going to put in a disgusting looking UTAD where it gaps up and then just turns into a shooting star in the weekly and it fails this level right here? Very big possibility that actually happens. The chain is not great. The tape doesn't trade great. It's $1,000 stock. The lots aren't heavy in the order book whenever you're looking at something like this and you're trying to read tape and order flow and you're looking at like volume. I mean, look at the volume profile on like your 5 or your 15-minute or your hourly. It's definitely a little bit inconsistent. Most of the volume is coming in off of this candle right around here, which obviously had a seller behind it, right? And they recovered it, right? They didn't pull it into the gap in terms of the next following days after the earnings candle. So that's why this one completely fell off a cliff and had a path of least resistance built down here, where it just, died and filled the entirety of the gap. But what they did was they took out this previous higher low and they turned that higher low into just a simple little sweep into another higher low. And now what they're trying to do is maybe distribute the top end of the chart and then push it down to the bottom end of the chart. And this could start looking like a really nice weekly schematic where, you start getting an internal range built, you get a pop in the support, then you start finding like LPSYs or MSALs off of these levels that make sense. And then this could start looking like a disgusting distribution later on throughout the year or into like summer where this has to pull back to fair value as well. Maybe down into here at like 700 I could see on Netflix. If you guys go to the daily chart, we have a huge gap right around that back test as well. So whenever this does distribute, it's going to distribute and it's going to bring out super beautiful targets to the downside. Like I said, back test of this, gap fill slightly beneath, 13 points lower. Super, super nice look over here within Netflix, but we do need to see the signs. I'm watching the purple circle. Yeah, around that. I mean, it's definitely a speculative idea, but if you're just looking and waiting for that lower high, and then that lower high starts failing levels and losing levels, and then you start seeing the speed increase after those levels are lost, that's how you know you're right and how you know your trade is goated and it's going to pay you. Um, so yeah, I mean, you could be looking for lower highs on a lot of these different names, and that's probably going to be my plan here into the new week. Phantom print was met within NVIDIA. The gap was filled. There's no crazy downside target other than 99 for NVIDIA once again. But yeah, we have to wait and find those signs. If we go over into stocks to trade and we just break down the overall market, CCJ was an interesting looking chart to me for a long side trade. It's kind of like a defensive, it's like a commodity related name, I believe. And what this did was it built kind of like your initial support, but the leg wasn't strong, and then it pulled its way a little bit lower. And what it did was it kind of just back tested this support down here, and it swept out that support. Let me clear my it back tested this support down here, it filled it, and it swept it, and then you started to see like really nice signs on these pullbacks that were holding up relatively well in these previous levels being reclaimed and held for a swing trade to move to the upside. I mean, that's a really easy looking swing trade. It's just the name is kind of garbage. Um, uranium, okay, yeah. But yeah, that was an interesting chart to me. And it could still bring an opportunity, but I don't really prefer trading the illiquid names like that. Um, there isn't really anything else within like the growth sector or anything that is super notable to me. Obviously, we have stuff like Google looking solid. We have stuff like Docu looking super good. I mean, this chart's just insane on Docu. I mean, this is a super big accumulative base that has obviously a back test of where the resistance was, and then they held it. And the volume patterns on the daily are kind of ridiculous. I mean, this is huge volume on a gap to the upside, a lot of range building afterwards, bigger volume upticks on this gap up second to that. And then you're just getting overall really clean looking volume patterns. So I'm kind of interested in Docu, and the chart looks super good on the weekly, but it's just that name that like I don't really want to trade. I'm honestly just going to really be focusing the liquid leaders in the market. There's no other way that I could really trade this environment right now until I find that we get through the reports, we see the rotations, and then we see the names that are really sticking out in terms of distributions that have not been completed yet, and that's going to take earnings candles, right? Um, so yeah, my focus on the week is going to be Tesla and to see what it does. Probably just an intraday trade. Nvidia, I really want to see what this one does off of the fill of these gaps. If this gives a signal, this could be a beautiful short side trade. Apple, this is kind of a garbage chart, but we're about to breach the gap as well over here, and there's earnings this week, and this chart just it doesn't really look too good. I mean, we recorrected our way lower. What we didn't do was we didn't take out these supports. We filled the gaps. I mean, I don't know. We have to wait and see for that earnings candle. And if it's a flush trade, it's going to be a beautiful flush trade. I took the flush trade over here on Apple, and that was a really nice lower high. And that could come back and be a really nice opportunity if we don't get the implied move through the report and it opens up in a super sketchy spot. Maybe there's a lot of bullish things said within a report or within the guidance. You get some price target upgrades. You never know, right? Everything can kind of align with an intraday move where we don't have to swing. So we'll wait and see. On a week like this, that's very heavy data related and it's very high opportunity of a catalyst just pushing price. You kind of have to wait and see what price does into that data. And then the data is the deciding factor on what happens after what price shows into the data. It's people think data is random and people think like, oh, well, I'm going to do some macroeconomic analysis on this because this and that and this and that. No, it more and less comes down to the environment of the market we are in and where we're at in terms of price. It doesn't, you could get a bullish sounding GDP and a sell, and vice versa. You could get a bearish sounding GDP and you could get a pop. So with all that being said, like I said, kind of just got to see what happens into, Tuesday, I would say would be the sweet spot to start looking for execution. I own 2 contracts of SPY 535 puts at like a 6 point something average. I'm down like 6 or 7%, but I'm about 2/5 size on it. Um, so, I could go straight gung ho if this level is failed, and then it could just be a super nice short side trade early week or midweek, right? We don't really know yet, but we have very easy levels to trade off of. Very easy. I mean, we have 565, we have this level at 547, and then we have targets to the downside as we also have targets to the upside, right? So it's definitely a two-sided market. Picture perfect schematic would be this. So I don't know, we'll see. But yeah, I'm gonna get going, guys. I'll try and post some charts a little bit later in the Joe charts of interest, just if I come across anything that's like super um, notable to me. I'm really sick right now, so I'm probably just going to sleep the rest of the day. But yeah, I'll see you guys later.